Current trading data places Datavault IA Inc., ticker symbol DVLT, at exactly $2.03 per share. We are looking at a downward move of $0.10, which translates to a slide of roughly 4.69% for the session. Now, if you were looking at your screen, perhaps scrolling through your Robinhood app or checking your Fidelity mobile app, and you see a stock trading near $2 with AI in the name, your brain likely defaults to one of two assumptions. The first expectation is that this is just another penny stock slapping AI onto its letterhead to catch a bid in a hot sector. The second expectation is that it's a lottery ticket, a tiny company that might be the next NVIDIA stock if lightning strikes twice. But the reality of Datavault AI is significantly stranger, more complex, and frankly more fascinating than either of those standard narratives. This isn't just a tech company. This is a company that just accepted over 1,000 Bitcoin as a form of equity payment and is planning a meme coin dividend. Yes, you heard that correctly. We are looking at a Nasdaq-listed entity that is blurring the lines between traditional equity, crypto economics, and high-frequency data monetization. The gap between expectation and reality here is wide enough to drive a truck through. You expect a standard software earnings report. What you get is a press release about Dream Bowl 2026 tokens and strategic partnerships with biotech firms like Silets, funded in cryptocurrency. This creates a curiosity loop that we have to close right now. If you are sitting there holding Apple stock or steady blue chips in your Schwab Intelligent portfolios, looking for safety, this might feel like pure chaos. But if you are looking for where the experimental edge of the market is currently bleeding, you have found it. We need to tear apart this chart, look at the volume, and understand why a stock with 148% revenue growth is trading at $2. Let's look at the immediate price action. That 4.69% drop to $2.03 isn't happening in a vacuum. When you see a stock slide 5% on a day where it isn't announcing bankruptcy, it usually signals a specific type of market digestion. We are seeing profit-taking following the massive volatility introduced by their recent news cycle. The stock has been bouncing between a 52-week low of roughly 25 cents and a high of over $4. That is an enormous range. It tells us that the market has absolutely no idea how to price this company. Is it worth $50 million? $500 million? The volume we are seeing, tens of millions of shares changing hands, suggests that retail traders on platforms like Interactive Brokers and SoFi Invest are fighting a tug-of-war with algos that are trying to parse the company's new direction. The selling pressure we are seeing today is likely a sell-the-news reaction to the complexity of the Silets deal. Whenever a company announces something as complex as a two-tranche equity financing involving Bitcoin and warrants, the immediate reaction from the old-school institutional money, think the guys managing conservative Fidelity mutual funds or Fidelity Iris, is often to step back and wait for clarity. They don't like complexity. They like predictable cash flows. But for the individual investor using a Fidelity trading platform or executing quick trades on Robinhood crypto accounts, this volatility is the juice. The stock is currently hovering near a psychological support level at $2. If it breaks decisively below $2, we could see a flush down to the $1.80 range as stop losses get triggered. If it holds $2, it validates the idea that there is a floor of believers who think this Bitcoin-backed pivot is the real deal. Let's get into the what. What does Datavault AI actually do? This is where the story gets really interesting and where we leave the meme stock narrative behind for a moment. Originally, this company was known as WISA Technologies, focused on high-definition wireless audio. You might wonder, how do you go from wireless speakers to Datavault AI? That is a pivot that would even make the most agile Silicon Valley startup head spin. They have essentially kept the legacy audio business, acoustic science, but are betting the farm on their data science division. The core thesis is that in the age of ChatGPT and Gemini, data is the new oil. But not just any data, clean, structured, owned data. Datavault claims to solve the black box problem of AI. Right now, if you are a massive company, you are terrified of feeding your proprietary data into a public AI model because you lose control of it. Datavault's pitch is that they provide a platform for data monetization, valuation, and real-world asset tokenization. They want to take data sets, wrap them in a secure digital container, a vault, and allow companies to license that data to AI models while tracking exactly who uses it and getting paid for it. It's like Spotify for data. Instead of musicians getting royalties when a song is played, companies get royalties when their data is used to train an AI. On paper, this is brilliant. It addresses the single biggest bottleneck in the AI industry right now, the legal and ethical sourcing of training data. If they can pull this off, the current stock price is a rounding error compared to their potential value. However, we have to look at the execution. This brings us back to the recent headline that has everyone talking, the Silex Holding Company deal. Silex, a biotech firm, didn't just write a check. They closed a tranche of investment using Bitcoin. Specifically, they transferred about 1,237 Bitcoin to Datavault. This is incredibly rare for a Nasdaq company. It signals that Datavault is positioning itself not just as a tech company, but as a crypto-adjacent treasury. By holding that much Bitcoin, the stock's book value is now partially tethered to the price of BTC. If Bitcoin goes to $100,000 or $150,000, Datavault's balance sheet expands without them selling a single extra software license. This makes DVLT a hybrid proxy. You're buying an AI data startup, but you are also buying a bag of Bitcoin. For investors who use Robinhood stock trading or Coinbase, this correlation is attractive. For traditionalists, it is terrifying. Let's talk about that meme coin distribution I mentioned earlier. The company announced plans to distribute Dream Bowl 2026 meme coins to shareholders. This is where you really need to pause and check your risk tolerance. When a company starts issuing meme coins as dividends, it's engaging in what we call attention engineering. They're trying to mobilize a retail army. It's a page right out of the playbook we saw in 2021 with AMC and GameStop, but evolved for the current market. They're trying to create a viral loop where owning the stock gives you a token, the token gets hyped on social media, the hype drives the stock, and the cycle repeats. It's innovative, sure, but it also screams that they need retail volume to keep the liquidity high. Let's shift to the financials because the numbers ultimately have to back up the story. Revenue for the last quarter came in at roughly $2.9 million, which was a 148% increase year over year. That is the kind of growth number that gets you a high valuation multiple. If you were screening for high growth on your Interactive Brokers platform or looking for growth ETFs in your SoFi robo-advisor, this top-line number would light up green. However, the bottom line is still bleeding. They posted a net loss of nearly $33 million. A lot of that is non-cash expenses and one-time costs associated with their pivot and financing, but cash burn is cash burn. They're spending money to build this data vault infrastructure, and they're relying on financings, like the Silex deal, to keep the lights on. The partnership with the World Boxing Council is another piece of the puzzle. They signed a deal to help the WBC monetize their data and events. Think about the amount of data a sports organization has: historical fight stats, ticket sales, viewer demographics, video archives. Datavault wants to tokenize that access. If they can turn the WBC's archives into a recurring revenue stream via AI licensing, it proves the model works. It moves them from theoretical tech to applied tech. Now, I want you to take a second and engage with this idea. Comment below how many shares of Datavault AI you currently hold, or if you're sitting on the sidelines. And more importantly, answer this. Do you think a company holding Bitcoin on its balance sheet makes it a better investment or just a riskier one? I want to see the debate in the comments because this is the central tension of this stock. Moving back to the chart and the technicals, we are seeing the stock trade below its 50-day moving average, which is often a bearish signal for short-term traders. However, the RSI is hovering in neutral territory. It isn't oversold and it isn't overbought. It's waiting. The market is in a prove-it mode. The drop today reflects that hesitation. Investors are saying, okay, you got the Bitcoin, you got the Silex deal, you changed your name, now show us the recurring revenue. We also need to consider the macro environment. We are in a market where AI is the magic word. NVIDIA stock has set the tone, lifting the entire sector. But capital is becoming more discerning. In 2023, you could just say AI and go up 20%. Now heading into 2026, investors want to see the plumbing. They want to see the infrastructure. Datavault is positioned